Stocks oscillate in a small band with mid-cap showing relative strength. Metals and industrials notch gains while energy and auto stocks are some big drags. Global investment firm Abu Dhabi's IHC is investing $1 billion in Sammaan Capital for an over 41% stake. It will also make an open offer for an additional 26% at 139 rupees a share. The move marks a milestone transition for the home financier. Bajaj Auto calls it a rocking festive season. Maruti 2 sees sales top 1 lakh vehicles for the first time ever in Navratri. What's more, the two-wheeler and passenger car makers also point to strong export growth. Oil prices have now declined to a 4-month low as traders expect OPEC and allies to hike output by around 500,000 barrels a day. Rising US crude and gasoline stocks also weigh on sentiments. Good afternoon. You're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Hormuz Fatakia. Well, the markets celebrated going into the long weekend on Wednesday itself, and they are currently in snooze mode, as is the Nifty. Now, the Nifty has traded in a very narrow band today of just 100 points, and it's continued to move in that range. We are set for weekly gains this time around. 24,654 is that level which we need to close above for a weekly advance, and we are comfortably above those levels. The Nifty Bank has been the index of the week, though, after the move that it saw on Wednesday, the best single day move in 3 months, and it has built on to those gains more or less. It's still hovering around that 55,500 mark, but trading with gains of around 100 points, still sticking to or ensuring that the Nifty remains in that narrow range that it is. But the broader markets are doing fairly okay for themselves. The mid-cap index was up 200 points on last check, now up 260 points, so 0.5% higher on the mid-cap index. Of course, plenty of movers in the broader markets today, and Sai Silks Kalamandir reacting to its business update, 17% higher now on the stock, is the biggest single day move that the stock has seen since its listing. But the stock that has been in focus all day has been Sammaan Capital, and that is the big story. That is, Abu Dhabi-based international holding company is set to acquire a controlling stake in the company. Now, the deal is valued at over 8,850 crore rupees. Earlier today, we spoke to Gagan Banga, the MD and CEO of Sammaan Capital, for more on this acquisition. Listen into what he had to say.
We were already very well capitalized at a capital adequacy of close to 30%. So this was not a capital requirement. This was a partnership requirement. This was a reinvention requirement. And to be able to build that 4 pieces of debt on this 1 piece of equity, that 4 piece of debt in our current structure would have costed us 150, 170 basis points more than what it will prospectively cost. My estimation is that 12 months from now, or 18 months from now, 6 months after the approval, we should be 170 basis points. We've given a very clear guidance in terms of how much the collections work out. For this year, we are looking at 10,000 crores of cash collections. I see no reason why in this financial year we should not do at least that much. With such strong parentage, the message which goes out to borrowers also is that these are not guys who are now going to be pushed into a corner.
Sammaan Capital seeing some profit booking after a 25% surge in the last 6 sessions. Now, sources are suggesting that one of India's largest agrochem companies may be in talks with a global beverage and snack major for a long-term supply tie-up. Vivek is here with those exclusive details. Vivek.
Well, that's right. So what we are picking up from our sources is that India's agrochem major UPL is in advanced talks with one of the world's largest both beverage as well as snack maker, PepsiCo. This is for a long-term supply agreement. We understand that PepsiCo is likely to mandate use of UPL agrochem solutions for global contract farming operations, and along with that, the deal may extend to use of company's gel-based technology for water conservation. Now, we understand that PepsiCo as well as UPL are in talks, and this particular partnership is going to be a multi-year partnership. Now, what we understand is that this particular deal is likely to be announced by UPL within its subsidiary, which is called as Superform. This is the company's specialty chemistry subsidiary. And we understand that UPL may be going ahead and supplying one of the key ingredients for Pepsi's key stimulant as far as its own operations are concerned. We've reached out to both UPL as well as PepsiCo. We are awaiting a response from both of them. But currently, what we understand from our sources is that it's going to be a multi-year opportunity across a whole host of solutions that UPL is expected to provide to PepsiCo for its global operations.
Interesting. Exclusive there from Vivek. 2.5% higher is where UPL currently stands at the highest point of the day. But Bajaj Auto, after strong September sales, we spoke to Rakesh Sharma, the executive director of the company, and he said that it has been a rocking 11 days of the festive season. Listen into what he had to say.
It's been a rocking 11 days of festive. And I can tell you that at least I was trying to sort of go back in history. And if I just look at these 11 days and compare them in the past, I think we've never hit this level. So we're hoping that this run continues right to the end of festive. And I think there is a very, very positive sentiment out there. There is the very tangible benefit of disposable income impact because of the cut across the categories in GST. Well, on exports, certainly the idea is to breach the 2 lakh, and that there are a lot of things which are very, very positive. I would say that among the top 30 countries, which account for 80% of our sales, they're doing very well. We are outpacing the industry by at least 50%. We'll hope that we can reach the 2 lakh mark in Q3. Inventory levels are geared up to service this big spike. So, but I guess by end of October, the inventory levels should normalize.
Now, big ticket buys are back in focus this festive season. From TVs to refrigerators, consumer durables are seeing a revival after last year's slowdown, now powered by GST 2.0 and a wave of online and offline offers. Now, according to some reports, urban spending is projected to increase 18% to over 2 lakh crore rupees in the upcoming festive season. Shivani Bajaj brings us this report.
India's festive season isn't just about lights and celebrations. It's also when families make their biggest purchases. From televisions to refrigerators, consumer durables are key barometer of how confident households are feeling about the economy. This year, GST 2.0 and rising online discounts are shaping the market. And the question is, are Indians ready to spend big again? Let's find out. From TVs to washing machines to electronic items, consumer durables account for a sizable chunk of the festive shopping in India. In 2024, growth in durables was approximately 9.5%, well below the double-digit boom retailers have been used to. Inflation and subdued consumer sentiment impacted demand. But 2025 is different. According to sellers, GST 2.0 has lowered rates on several categories, giving consumers a reason to upgrade. Market checks in Delhi NCR suggest that demand is picking up, and with online platforms offering mega sales, offline brick and mortar stores are forced to innovate with attractive offers to sweeten the deal.
लास्ट ईयर का जो फेस्टिव सीजन था, इतना अच्छा फेस्टिव सीजन रहा नहीं था एज़ कम्पेयर टू मार्केट सिनेरियो. कस्टमर वॉकिंग भी थोड़ी कम थी और उस तरह का जो टर्नओवर हुआ नहीं था. बट इस ईयर की बात करें कंपेयर टू लास्ट ईयर से, जो जीएसटी का काफ़ी अच्छा इम्पैक्ट रहा है, जिसकी वजह से क्या नाम है, जो प्रीमियम और हाई एंड जो प्रोडक्ट है उसका सेल आउट बढ़ा है. जो मेजर इम्पैक्ट कर रहा है वो है एसी और एलईडी, क्योंकि एलईडी और इसमें जो 10% का जीएसटी जो डाउन हुआ है उसकी वजह से कि अभी मार्केट में कस्टमर भी काफ़ी अच्छा है और सेल आउट भी काफ़ी अच्छा हो रहा है. तो अभी जो करंट डेट की अगर बात करते हैं तो अप्रॉक्स लास्ट ईयर से टिल डेट में एप्पल टू एप्पल कंपेयर करते हैं तो 20% से ज़्यादा का भी जो है टिल टाइम ग्रोथ है.
According to consumer durable chains like Electronics Mart in Noida, the tax cuts have allowed them to reduce prices on several models. That has given retailers breathing space, but is also forcing them to compete harder with online platforms. High levels of inquiries and strong footfall are early signs of strong growth this festive season.
After 2 years, I think there will be a double-digit growth in televisions, which is a really encouraging signs for TV market. Tier 2 and Tier 3 is growing at a more pace than Tier 1 currently because firstly the pent-up demand and the trend of upgrading the television. Both are more in Tier 2 and Tier 3 cities, and even in rural markets where exchange of CRT TVs to LED TVs is happening, and all the sales are not going towards 32 inches. That is a very good news for the TV industry again.
GST cuts have also changed customer behavior. Retailers say stores in smaller towns are registering stronger growth, which in some cases is as high as 35%. Real test, though, will be to see if the demand continues through Diwali and the wedding season. For India, festive shopping is more than just a celebration. It's an economic signal too. And this year so far, the signal seems positive. If consumer durables keep flying off the shelves, it means households are feeling confident again. And that sentiment could help power the broader economy into 2026. In New Delhi, this is Shivani Bazaz.
Festive season demand on an upswing after GST 2.0. Take a short break. More news and updates on the other side. Stay tuned. Welcome back. Now, India and China have agreed to resume direct flights as ties normalize following 5 years of tensions after the Galwan clashes. Indigo has announced that it will resume the direct flights from the 26th of October. Indigo's announcements come shortly after the Ministry of External Affairs announced that the two countries have reached an agreement for the same. Shifting focus then, Russian President Vladimir Putin will visit India in December for an annual summit with Prime Minister Narendra Modi, with the Kremlin saying that full preparations are underway. President Putin warned the United States against pressuring India to stop buying Russian oil, saying that New Delhi will not allow itself to be humiliated in front of anyone. Putin also lauded Prime Minister Modi, calling him a balanced, wise and a nationally oriented leader. The Russian president last visited New Delhi in 2021, with both nations having a mechanism under which India's Prime Minister and the Russian President hold a summit meeting annually to review the entire gamut of ties. Let's take a short break. More news and updates follow on the other side. Welcome back. Now, come next week, we will have 3 IPOs worth 30,000 crores simultaneously vying for investor attentions, and 2 of them are valued at over 10,000 crore rupees. So it is a good time to put the spotlight back on those IPOs that were valued at over 10,000 crores and how they have fared so far. You start off with the largest IPO of the country so far, Hyundai Motor India, IPO'd last year, the 27,870 crore rupee IPO. The issue price was 1,960 rupees. Now it listed in October of 2024. The retail subscription barely, not even fully subscribed, only 50%. The stock currently trades 30% higher than in comparison to its issue price and is down 12% now from the post-listing high that it had made only recently, considering the rally in auto stocks. LIC was at one point the largest IPO of the country, listed in May of 2022. The 21,000 crore rupee IPO, the issue price of 949 rupees. Here too, the retail subscription was only 2 times the total number of shares on offer, and as of yesterday's close, the stock was 4% below its issue price and 25% below its post-listing high of well over 1,200 rupees. Now, just before LIC, Paytm was the largest IPO back in late 2021. The 18,300 crore rupee IPO, the issue price of 2,150 rupees. The retail portion here was subscribed just 1.5 times the shares on offer, and despite the rally that we have seen from the record lows that Paytm had witnessed, the stock is still 46% below its issue price. It has not seen its issue price since its listing, but from its 52-week high, the stock is down around 11%. Now, the other one, the last major IPO before this rush that we saw was Coal India way back in 2010. That 15,200 crore rupee IPO, a 245 rupees issue price. The retail portion here was subscribed over 2 times times, and since then the stock has done fairly okay, 60% higher in comparison to its issue price, but from its post-listing high, the stock is down close to 30%. The other major one we had recently was HDB Financial Services, the currently biggest IPO of 2025 before Tata Capital takes over next week. A 12,500 crore rupee issue, 740 rupee issue price. The retail portion here was subscribed 1.5 times, and it is only after the rally that we saw in the stock on Wednesday is the stock above its issue price and still remains 15% below its post-listing high. Now, Swiggy was the other major IPO, well over 10,000 crore rupees, 11,000 crore rupee issue size, 390 rupee issue price here. The retail portion also saw a subdued response, barely managed to see full subscription, somehow still managing to hold on above its issue price, but from its post-listing high, which is well over 600 rupees, the stock is down almost 33%. General Insurance Corporation was the other major PSU IPO, well over 11,000 crore rupees here as well. Adjusted for its bonus issue, the stock had an issue price of 456. The retail portion here too failed to see full subscription, only 60%. The stock still down 20% from its issue price and 30% from its post-listing high. SBI Cards was a very interesting listing, listed just at the onset of the COVID-19 pandemic. 10,300 crore IPO, a 755 rupee issue price. The retail portion here saw okay subscription of 2.5 times, still 16% higher than its issue price, but 15% below its post-listing high. And the last major IPO of over 10,000 crore was NTPC Green Energy, a 10,000 crore rupee IPO, 108 rupee issue price. Here too, the retail interest was slightly higher considering we were in a rush of IPOs, 3.6 times as well. But the stock remains below its issue price and significantly below its post-listing high, which is well over 150 rupees. So these were some of the major 10,000 crore rupee plus IPOs that we have seen. We have two more lined up next week, be it Tata Capital and LG Electronics. It remains to be seen which way the market sways towards. But with that, we call time on this edition of Business Lunch. From me and the team that put this show together, thank you so much for watching. MidCap Radar on the other side.